Hey, what's up, guys? Chris Steves with eXp Realty in Ottawa. It is July 24th, 2024. Gonna dive into real estate market update. We're gonna talk about Bank of Canada, interest rates, inflation, how this all affects the real estate market, some long-term stuff, just general economics for Canada. So let's dive into it. So right away today, the Bank of Canada announced a quarter point rate drop. Yay, this is excellent news for Canada. I'm happy to see it. You know, this is going to help create some confidence and trust that the markets in Canada are going in the right direction. This is giving people hope, guys. This is what we want. We want to see rates coming down slightly. I'm glad they're not doing a massive rate drop. The quick up and down of these interest rates, I don't think that's healthy overall. So, doing a quarter point, in my opinion, I think that was the right call. Happy to see it. People on variable interest rates right now, obviously, your rates are coming down. This is very good for mortgage holders. Ideally, banks are going to be dropping their fixed rates and their, etc. So this is just good for anybody borrowing money, for the real estate industry in general. I'm certainly happy to see it. Now, looking at more of like a big picture, we've got, like, will interest rates continue to come down even lower? That's a tough one. If I have to guess about the long term of where things are going, I read something yesterday from a very trusted economist, Martin Armstrong. He's the guru. He said interest rates always rise in times of war. That gives me a little bit of caution that, I don't know if long-term interest rates are going to continue to come down, if they will come down lower. I am worried right now. We've got a lot of international conflicts with the West and other countries. I don't want to dive into too much of that, but we know it's happening. I think that it's going to get worse. I think it's going to get worse for the number of years. The wars and the conflicts will escalate, and interest rates, the spending, the government spending, I mean, it's going to continue. These governments are going to continue to print a ton of money. War times, as governments are spending out of control. I mean, I don't know how much money we've sent to Ukraine so far, but just as an example. So, you've got. I don't see government spending slowing down at all, especially with the U.S. So they're going to be continuing to flood a ton of money into circulation. That kind of ties into inflation, which I know I talk about it a lot, but it is a major factor to watch when we're looking at overall economics. I don't see inflation going away. I mean, again, I've said this before, but are the numbers we're being told really that accurate? I mean, the inflation of 2.7 or 2.9%. What is that based on, and will that continue? I don't see inflation going down. I don't see it going away. I don't see the current governments getting control of it. And there's just too many factors here, and I think that a lot of those factors are out of their control. I mean, the overall cost of manufacturing, the cost of labor, the cost of all these things has to rise because guess what? I think we're in a recession. I think spending is slowing down. I think people everywhere are becoming more dollar conscious. They're pulling money in because they're worried about their future. And so the cost of living is going up. Businesses, if they're earning less income, they have to charge more to stay afloat. Employees, Canadian citizens everywhere, they have to now increase. They need more money for labor because their cost of living is going up. and they can't live off minimum wages. They certainly can't live very well. I mean, just right now in Ontario, the LCBO is on strike. They want more money. I was actually under the impression that they made decent money to begin with, but that's neither here nor there. They're looking to get paid. They want more money. The same way everybody, everywhere, every laborer, every worker wants more money, and they need more money. The dream of home ownership in this country is fading for certain people. So, we've got the cost, the overall inflation. I think that will continue. Government spending, I'm a broken record here, but I'm saying it again. Government spending out of control. When are they going to ever get it under control? But at some point, somebody has to pay back all the debt that our country is going into. Who's going to pay for it? You are. And they're going to increase your taxes even further as they continuously look for ways to increase your taxes to recoup all the money that they're spending out of control. And so that just adds to the increased cost of living for Canadians as taxes increase. Inflation's a problem, guys. And so, we're going to tie all that together, and we've got country Canada and the U.S. going extremely further into debt. The debt in the U.S. is something like $34 trillion. In Canada, it's maybe a couple trillion. The amount of interest that they're having to pay alone in Canada is something like $80 billion a year. In the U.S., they're paying over $1 trillion a year just in interest on their debt. So that's going to exponentially increase these debts because, and they're just going to spiral out of control. And, I'm getting ahead of myself here, but long term, you got a sovereign debt crisis that's never going to get paid back. The only solution is, over time, we're in a current cycle of fiat currency right now. They'll have to try and introduce some kind of new monetary system because the old one is failing and it's a problem and the money is losing its value way too quickly. So we have to replace it with something. What's that going to look like? I don't know. But bringing this all back to real estate, no matter what the Canadian dollar is doing or the American dollar or some other currency, a BRICS currency, a Bitcoin, or anything, whatever, dineros and pesos and whatever else. So no matter what's happening with our currency, real estate is always going to be a physical, tangible item. It's a tangible asset. Everybody in Canada needs a home, house, condo, farm, whatever you've got. That is a physical, tangible item that, you own something real. This is not a number on a screen. This is not a cryptocurrency. This is a real, usable, necessary asset. And so do I believe in investing in Canadian real estate and Ottawa real estate? Yes, I do. Because you own something. And if the Canadian dollar, if we turn into Venezuela next year, you'll be happy you have a home. Because the dollars are going to be worthless, but you will own something. And this is the same for all tangible items, vehicles, gold, real estate, any collectible coins, anything tangible that will always withstand the test of time. And as different currency cycles continue, you own something. So yes, I'm a fan of real estate. Is now a good time to buy real estate? Yes, I still think it is. Inventory levels are pretty high right now. It is a buyer's market right now. And there is a lot of motivated sellers out there. They are interested in doing a deal. And, you might not realize it, but there's some sellers that need to make a sale. And if you're careful, you find the right opportunity as a buyer, you can find some really good deals. So yeah, I think now is a very good time to buy. Do I think real estate values will go up or down? I think they're going to go up. But I should say I think they're going to remain fairly flat for quite a while with slight growth, not a lot overall. So don't get excited that real estate's going through the roof. I hear people say it. I don't believe it. I also hear people say that real estate's crashing. We're going off a cliff, and things will be worth 50% less next year. I am not buying into that one. I hear that every year. I've heard that for 20 years. I don't see it happening. I think it's going to be kind of a business as usual, more so a buyer's market, but because of a lot of factors, I just see pricing being, for the most part, level. Maybe like 1% of growth or something. So that's my take on tying all these economics back into what it's doing for real estate. Yes, I'm still a believer in real estate. If you want to live in the Ottawa area or Canada, and you want to be here long term, sure, I do recommend buy some real estate, buy your home, find a good deal, negotiate a good deal, get a good mortgage broker, get the best rate you can. I think these are good opportunities. Could it be more expensive dramatically next year? It could be. I mean, it's so hard to say what's going to happen. There's so much money in circulation. But I think that, sure, it's a buyer's market. Yes, there's deals out there. Yes, I think next year there'll still be deals as well. So, you don't, as a buyer, you don't have to rush out there. But that's my overall outlook for things. Again, super happy. Bank of Canada, thank you for doing that rate drop. Everybody on a variable rate right now is thanking you. Real estate, it will continue. It's not heading off a cliff. I think it's going to be just fine, especially Ottawa. But big picture, keep in mind that there's a lot of variables at play and a lot of geopolitics and economics that are going to affect things long term. And again, you'll always need to be careful with your spending. Make sure you're planning and budgeting, and don't get over your head in debt. Now is absolutely not the time to take on a shitload of debt. I don't recommend it, just because of the uncertainty of the future. So there you have it, guys. I think that's it for today. I hope that that's helpful. If you guys have questions about real estate, or you want to talk about real estate at all, always happy to chat. You know where to reach me, and I'll see you on the next one.